Assalamu alaikum and hello everybody. This is the first area of our paper for performance management activity-based costing. Before we start properly with the activity-based costing, we will first look at the traditional accounting, then we will compare, then we will move towards the activity-based costing. So let us firstly discuss the difference between the management accounting and financial accounting. Management accounting, as you can see, it is the concerned with preparing and presenting accounting information management to help with plan, control, and decision making about the business operations. Okay, it is only concerned with the preparation, presenting accounting information to help management regarding their future plans, their control related activities, and their decision making about the business operations. While you know, uh, financial accounting is concerned with preparing and presenting accounting information on the performance and the financial positions of the business. That's it. They're only concerned with the financial positions of the business and nothing more. Whereas now let us do the some comparison between the two, uh, management accounting and financial accounting. As far as the user of information is concerned, it's for management accounting, it is for the usage of management only. Whereas for the financial accounting, it's for the shareholders, it's for the banks, it's for the lenders, it's for the suppliers, it's for the investors, it's for the governments. Okay. Um, as far as the format of the information is concerned, management accounting format can take any form. It can be of any kind. Financial accounting format is presented and regulated by the law and the profession itself. For example, IFRS gives the particular format. Okay, then we have purpose. What's the purpose of information? As far as management accounting is concerned, it is useful to plan, control, and decision making. Whereas the financial accounting purpose of information is for the stewardship and investment decisions. Okay. As far as the basis of valuation is concerned, um, management accounting considers relevant costs mostly, and financial accounting only concerned with the historical costs. Okay, so far, so good. Now the key, as far as the planning, control, and decision making is concerned, yeah, planning, control, and decision making is concerned. As far as uh, what is planning? Planning. Planning is the setting of goals. It is the setting of goals and and selection of these means Means achieving of these goals as businesses become large, these procedures need to be formalized. Right? We have short term. We have two types of plans. Okay, one is short term plan, and one is long term plans. Um, Short term plans such as annual budget, uh, intended results for forthcoming year, intended results for forthcoming year, forthcoming year. Long term plans also called, these are also known as strategic plans, and it usually look at the long term objectives. Long term objectives like 5 to 10 years plans, what they want to, where they want to start manufacturing, where they want to introduce their products, in which markets they have to work, that sort of stuff, right? Then we have control. What is control? Control means checking that an organization checking that an organization is on track to meet track to meet its long and short term objectives. Short term objectives and taking action to correct any deviations from this. Now, again, we have these controls for long terms and short term. Okay, as far as long term controls are concerned, long term control includes strategic performance evaluation, right? Uh, which measures an organization performance against its strategic objectives. Okay, then we have sorry, uh, short-term controls, which focuses on comparing budgeted results with actual results, right? This usually takes the form of operating statement, which breaks down the differences into parts, for example, variances. And then finally, we have decision making. Decision making usually involves using the information provided by the costing system to make decisions. Uh, for example, when an organization decides the appropriate price to charge for a contract they are tendering for, or whether it would make financial sense to outsource the production of an essential component. Okay. Now, as far as exam advice is concerned, the traditional costing methods are assume knowledge from management accounting papers, that is your MA F2 exam. Okay. Firstly, we do have marginal costing. Under marginal costing, uh, one first thing first, under marginal costing, fixed overheads are not included in unit costs. Fixed overheads are not included in unit costs, but are treated as period costs, that is written off in full in the statement of profit or loss in the period they occur. And inventory valuation include only the variable cost of uh, production, right? Uh, I hope it's here till here. Now, let us discuss about the absorption costing. So under absorption costing, fixed overhead costs must be allocated, apportioned, and absorbed. Okay. Under absorption costing, what I said, under absorption costing, fixed overhead costs must be allocated, must be apportioned, and must be absorbed. Okay. Uh, as far as allocation is concerned, as overhead costs are incurred, as overhead costs are incurred, they must be allocated, they must be allocated to the cost centers to which they belong. Costs related to a single cost center, single cost center. Okay, what I was saying, as overhead costs are incurred, they must be allocated to the cost centers to which they belong, and costs to which they belong, costs and costs related to a single cost center are allocated to that cost center. What is cost center? A location, function, or item of equipment, material, anything. Okay, equipment in respect of which costs may be ascertained and related to cost units. For control purposes. Okay, the next is apportionment. Well, apportionment is necessary when overhead is common to multiple cost centers. Okay, First thing first, if when it is necessary, when overhead is common to multiple cost centers. Okay, and such overheads must be shared between relevant cost centers using an apportionment method of apportionment. Okay, such overhead must be apportioned between relevant cost centers using an appropriate method of apportionment. For example, here is example. Uh, we have various types of costs here, and here is basis of apportionment, right? For example, we have number one, rent, rates, heat. The basis for apportionment is floor area. Okay. Uh, Another one, for example, the cost is of supervision, canteen cost, while number of employees. Next, depreciation or plant insurance, uh, carrying value of plant. Now, the next step is a reapportionment. Okay. Reapportionment, overheads apportioned to service cost centers must be reapportioned to production cost centers. This is achieved by selecting an appropriate reapportionment basis that would reflect how services departments support production departments. Common basis use include, for example, direct labor hours, machine hours, parts movements, variable overhead utilized. All fixed costs apportioned to service cost centers will be reapportioned to production cost centers for absorption into cost units. Then we have absorption. Absorption. The total overhead absorbed. Uh, Total overheads in each production department must now be absorbed into the production units, and this is achieved using one of the following methods, like direct labor audit, direct material cost rate, direct prime cost percentage rate, machine hour rate, unit of output rate. So far, so good, and I hope it is clear till here. So here is the example. ABC company estimates that its factory cost for the coming year will be as follows: direct material 40,000, direct wages 60,000, total prime cost 100,000, factory overhead 30,000, total factory overhead is 130,000. During the year, 10,000 direct labor hours and 5,000 machine hours are available, and 20,000 units will be produced. Okay. The requirement is the A requirement is calculate the overhead absorption rate using each of the following um, basis: direct labor hours, direct machine hours, direct labor cost, prime cost, machine hours, unit of output. Okay, and then in the requirement B, management has decided that absorption rate per machine hour is the most appropriate method of absorbing overhead. One of the products managed manufactured by ABC company is the Smithgate. Each Smithgate costs $5 per unit in materials and $10 per unit of direct labor, making a Smithgates require half an hour of machine time. Calculate the full absorption cost of 1 unit of Smithgate. Okay, so uh, let's do it. Let's do solve it. Okay, firstly, the part A, overhead absorption rate. Direct labor hour rate 30,000 divided by 10,000 hours is $3. Okay. Direct material cost rate, material cost rate, 30,000 divided by 40,000. We get 75%. Direct labor cost rate, 30,000 dollars divided by 60,000, all given in the scenario by or 50, sorry, 50%. Unit of output rate, 30,000 divided by 20,000, we get dollar 1.50. Okay. Now, the next requirement, that is our part B, full absorption cost. So, material 5, direct labor 10, prime cost we get 15, overhead point 0.5 machine hours into dollar 6, and we get 3. So total absorption cost is 18. Absorption cost total is 18. So far, so good. I hope you get it till while you get the introduction. I mean, get the example clearly. Now we are moving towards what is activity based costing. An approach to the costing and monitoring of activities, which involves tracing resource consumption, and costing final outputs. Resources are assigned to activities and activities to cost objects. The latter use cost drivers. Attach activity costs to output. So far, so good. So the thing is, traditional accounting, uh, traditional absorption costing uses one method, portioning all overhead costs between products, typically labor hours or machine hours. Right. Which means that product costs may not accurately reflect the true product cost. So when overhead costs accounted for only a small portion total factory cost, this inaccuracy was not significant. However, in modern factories and service industries, due to the reduction in the amount of labor used and the increase in the amount of high technology, overhead costs are often significant portion of overall product cost. The inaccuracy of absorption costing is no longer insignificant. As far as the activity-based costing is concerned, yeah, activity-based costing, I'm writing in short, ABC, aims to identify the activities that cause overhead cost to be incurred and to apportion the overhead cost to each product based on the use of the use of the activities by each product. ABC recognizes that traditional idea of fixed and variable cost categorizations may not be appropriate, and that as the proportion of overhead costs in manufacturing has increased. In manufacturing has increased. And there is need for a more, and there is a need for more accurate method of absorbing these cost into cost units, cost into cost units. So it's look for a clear picture of cost behavior and a better understanding of what determines the level of cost, that is cost drivers. Um, so far so good. Now, what is cost driver? A factor which can cause a change in cost of an activity. In absorption costing, just a second. Yeah. In absorption costing, it is assumed that the volume of output is factor which determine cost. However, ABC recognized that the amount of cost may be determined by factors other than the output volume. So these factors are called cost drivers. You know, For example, the number of purchase orders processed could be the cost driver for the procurement department. So an activity could give rise to multiple cost drivers as it consumes different types of overheads. For example, cost drivers associated with production may be, you know, now let us discuss the examples for it. Well, yeah, machine hours for apportionment of human resource cost, floor space occupied for apportionment of cost of premises, power consumed as direct overheads, quantity of waste, and rejected output for apportionment of recycling and quality cost. Therefore, different overhead cost types are absorbed into production cost units. Production unit using more appropriate rates based on cost drivers rather than single absorption rate. For example, for a particular production department, the falling rates may be suitable. And what can be those? Those can be warehousing costs is kg of material used, um, electricity cost for machine hour, production scheduling cost. That is production order, etc. So these can then be applied and aggregate to calculate an overhead cost per unit, as in step five as in step five, which I will let you know soon. Okay, now here it is. Activity based costing steps. So what are the steps? Step one, identify major activities with and each department which create cost. Which create cost. For example, production scheduling, machining, dispatching of orders, inspections. Then we have step two, create a cost center, or you can say cost pool for each activity. So the activity is known as cost pool. Cost pool for all production scheduling costs, all machine costs, all dispatching costs, all inspection costs. Then we have a third step. Okay. And what's the third step here? Determine what causes the cost of each activity. Determine the what causes the cost of each activity. You know, that is the cost driver. For example, number of batch setups for production scheduling, machine hours for machining, number of dispatch orders for dispatching, number of inspections. Then we have the next step, that is calculate an absorption rate. For each cost driver, for example, cost per unit of driver, batch setup, machine hour, dispatch order, inspection. Then we have next step, step 5, calculate the total overhead cost for manufacturing each product. Manufacturing each product. For example, number of batch setups per product into cost per batch setup, number of machine hours per product into cost per machine hour. So let me write those examples for you. Yeah. Number of, here it is. Number of batch setup for product Z into cost per batch setup. That's one of the example. For example, number of machine hours for product Z into cost per machine hour. Number of dispatch orders for product Z into cost per dispatch order. So that's all. Okay. So next step, the step 6, calculate the overhead cost per unit. And as we studied it in our tile, overhead cost per unit, total overhead cost divided by level of activity. Okay. And so the identify the cost drivers is a business enables management to better understand cost behavior. Okay. I hope you get it till here. Now let's do some examples. So here it is the example, and so let us start with it. The total budgeted fixed cost for a company are $212,000. These have traditionally been absorbed on a machine hour basis. Okay, the company makes two products A and B, right? So here it is product A, product B, direct material cost for A is 20, for B is 60. For direct labor cost, for A is 50, for B is 40. Machine time is 3 hours and 4 hours. Annual output is 6,000 and 40,000. The company is considering to changing to activity-based costing system and has analyzed the overhead cost into three categories: activities cost, pool and cost driver, machine related 178,000 machine hours, setup related 230,000 setups, uh, purchases related 304,000 machine purchase orders. Total orders are 712,000. So for A and B, machine hours are 3 and 4 each. Annual output is 6,000 and 40,000. Time machine hours are 18,000 and 160,000. As you can see, number of setups are 16 and 30, total 46. Number of purchase orders are 52 and 100. Total is 152. Requirement is calculate the total cost for each product, assuming that company continues to absorb overhead on a machine hour basis, calculate the cost per unit using ABC system, and compare this cost using each product, using ABC with the cost per unit, using absorption costing, and identify the main reason for the difference that we have to do. So let's do it. So let's do it. For A, oh, sorry. Yes. Now for the A, that is traditional, total overhead 712,000. Total machine hours 178,000. Okay. So rate per hour 712,000 divided by 178,000. And we got $4 per hour. Now we have two company products A and B. Okay, direct direct material 20 and 60. Direct labor 50 and 40. Okay, fixed overhead 3 hours at 4 we get 12, and 4 hours at 4 we got 16. So overall the total is 82 and 116. Right. So far, so good. Now let's move to the next part. That is activity based costing, ABC. Ah, okay. So we have activities, we have machine related, we have setup related, and we have purchasing related. Okay. So once again, overheads 178,000. Setup related, we have 230,000, and purchase related, we have 304,000. All we are taking it from the question that it's just control C, control V, copy paste right now. Consumption of activities, consumption of activities, that is our cost drivers, 178,000, 46 setups, and 152 purchase orders. Again, control C, control V from the data. Now, cost per unit of driver, cost per unit of driver. So it's $1. It's dollar 5,000 setups, 46 by the way. 45 5,000 setups, and lastly, $2,000, 2,000 per purchase order. Okay. Then let's trace this cost to products, to products. We have A and we have B. So We got 18,000, 160,000. Sorry. Yeah. 18,000, 160,000, 80,000. We are just tracing those. Okay. 150,000, 104,000, and 200,000. Now let's move. Now, over at cost per unit for A, it's 18,000 plus 80,000 and it's 104,000. Okay. Divided by 6,000, the number of units we got 33.67. Then for B, 160,000, 150,000 plus 200,000. And we have total number of units that is 40,000. So we got $12.75 per unit. Now, so let's here it is A, B, and direct material 20, 60, direct labor 50, and 40. And to fix overhead is 33.67 and 12.75. Let's do the total 103.67 and 112.75. We are done with our two of the requirements. Now let's do the last requirement, that is the comparison of activity based costing and absorption costing. So that's our last requirement. So what we will say, there is a significant difference in the cost of product A using activity based costing compared to traditional absorption costing. The cost per unit was calculated as $82. Under ABC, cost arose to $103.67, an increase of 26%. The difference in the cost per unit of product B is less significant It falls to $112.75 under ABC compared to $116 under absorption costing, which is a drop of only 3%. Okay. The cost of product A is significantly understated when absorption costing is used a significant factor in this is setup cost. The total setup cost apportioned to product A, product A uh, were $80,000, equivalent to $13.33 per unit. Product B, by contrast, has total setup cost of $150,000, equivalent to $3.75 per unit. Product A uses 16 setups to produce 6,000 units, which is $375 per setup. And product B used 30 setups to make 40,000 units, achieving an output of 1,333.33 per setup. So Similarly, in product related costs, the cost per unit of product A, the per unit of product A was around 104,000 divided by 6,000, and which it is 17.33, and the cost per unit of product B was $5. That is 200,000 divided by 40,000 is 5 per unit. So this is because on average, one purchase order was used for 115 units of product A, that is 6,000 divided by 52, and one for 400 units of product B, that is 40,000 divided by 100. So this differences in the use of the activities. Finally, what we will say, this differences in the use of activities are disguised when absorption costing is used and all costs are absorbed on machine hour basis. That's it for this question. I hope you get it. You getting the concepts well, right? And now, finally, uh, advantages of activity-based costing. Well, better decision making can be done. Companies will have a more accurate knowledge of cost and profit per unit. They can evaluate whether to stop producing loss-making products. Where cost plus pricing is used, apply activity-based costing. Means that price will be more likely to achieve the desired margins. Lastly, uh, there is a better understanding of what causes cause resulting from the resulting from identifying the cost driver. You know, this enables managers to make more informed decisions on action to reduce costs. Then control of overhead is more straightforward, as responsibility for incoming costs must be established before ABC can be implemented. Uh, More accurate performance measurement lead to better performance management. Now, what are the disadvantages? Well, number one, difficult to understand. It is complex. It's calculation. Uh, so it's difficult to understand. Number two, uh, it's costly and time taking. Additional time and cost will be incurred to set up and administer the system. And ABC is still based on budgeted overheads in the current period, which may be unsuitable for future strategic decisions. So far, so good, and I hope it is clear to here to you guys. And the concepts of the ABC so far uh, are clear to you. And we are done with the ABC. If you guys have any questions, you can ask me. Right? You can ask me on my WhatsApp. My WhatsApp contact is +9203021777706. That's the WhatsApp. You can contact me on, and I would like to know your feedback about the lecture, about your understanding, and yeah, if you have any questions, you can ask me. That's it for now. Take care and Bye bye.